There's a reason why I'm walking through this side. We are raising prices too, Alex, right? Forgot about that, dude. Did we announce that already? Do you want me to announce that, or you can do that tomorrow? You'll do that tomorrow, Alex. I'll let you announce that stuff. How much is a house around here? I don't know, man. Can't even afford the taxes. The reason why I'm showing you this is the people that live in here, guys, did not start off living in them. It's a process. Slow, meticulous. Some are lucky. You have to have luck, guys. You have to have luck, okay? In life, it's always luck. But you know what, man? You make your own luck. There's this quote I love to use. The more I practice, the luckier I get. The more I practice, the luckier I get. So you make your own luck, man. You know, luck is when preparation meets opportunity. Luck happens every day. You just need to spot it. A lot of people are not prepared, and so they miss a lot of these luck opportunities. So I was to say, you have to prepare. Same thing with trading, guys. I'm sitting around all day, you know, just trading small, scalping small, and then an opportunity like ICCC comes along, and I'm like, holy shit, is that luck that I nailed $8 to $8 or $7.15? Wait, $6.50, some shit. I posted. I forgot what I posted, but it was, you know, it was just like, dude, the quickest trade, man, like a minute trade. That's because I was prepared. My process got me there. We'll talk about that another day on how I was able to spot that. But I want to show you these. It's like building a house, guys. Remember this house was nothing. It was land when I first started doing my walks around here, guys. Now look how big the house has gone. I mean, they're taking like 2 years, 3 years to build this, but this is like a giant ass mansion. It's like a fucking hotel, man. It is a hotel. So you think these guys got lucky? Nah, dude. These guys, I don't want to tell you what they do. They own large chains of shoe stores, but you know, they started you know how this guy got started, man? He was actually in our place. We're talking about it. He started at the flea market. Flea market, guys. He was selling shoes that he bought used and new at the flea market. And from that flea market location, he grew his business to, Jesus, hundreds of stores around the nation. It's a very well known, I think they own a couple of these houses over here, but they probably built this for their kids and stuff. But look at this, man. You know, I mentioned this before. My viewers that have been watching this, have heard it. So I walked through here to tell you a reason. This is the title that I wanted to talk about is the 3 tips on how to grow a small account. Okay? And I walk you through this for a reason. Okay? It's all about the foundation, the fundamentals. What you see on the outside is the glitz and the glam. Okay? That's what we call the finish, right? But you know what the hardest part of this build, it's the foundation. This foundation used to be a very, very steep hill. Very steep hill. The foundation itself costs half of the fucking build. Because they have to come and remove, Jesus, like half of the hill. So that it flattens out the land, right? And so this is the thing people don't understand. People think that, oh, I'm going to jump into trading, slam a bunch of money down, treat it like gambling, and just become rich overnight. Just like all the furus that they advertise, right, guys? So let me switch back. So now we're going to start being serious. So the key, guys, I put down the 3 top. You know why I did that, guys? It's because that's what you see online about all these guys that are trying to tell you it's easy. It's easy. Trading's easy. Just follow these 3 tips and you're going to make a lot of money. Fucking bullshit. There's at least 330. You know, it's more than 3, guys. But these are clickbait headlines. And I put it out there on purpose, like I told Alex. Of course, there's more than 3. But they put that down to make it seem like trading is so simple. Trading is simple, guys, but they're using the word easy. Trading is simple. You follow a set of procedures, and it's repeatable. And the guys at MIC are doing this. And we call that process. Having a proper process is very simple, but it's not easy. The hard part is the execution and the discipline to execute such plan. So if you really want to talk about what the top three, I would say this. The top three to grow a small account is to find a repeatable process and repeat it. Okay, that's number one. It's small steps along the way. So I'll give you an example today. Today I started just I know myself. And so after a long weekend, like we have MLK, I always get FOMO. It's like, dude, I want to trade so badly. And so I know myself. So certain days like Monday, I size down, guys, because I know I have FOMO. So I size down. And my goal is to get a feel for the market. Because over the weekend, a lot of things can happen in the market, right? Trump can tweet, all this sort of stuff. So you have to have a good feel for the market. Are these stocks dumping when they spike up, or are they holding? So a lot of times the markets will dictate, what the stock does. If the market is weak, every stock gets bounced and then it tanks. Okay? But some of these tanks are short-lived and you get squeezed. As we saw last week, 2 weeks ago, everything was getting squeezed up. Every bounce was being bought and the shorts were getting destroyed. You know what I'm saying? And then last week, finally came down. Every pop was shorted. So this starting this week, we don't know. Today was a mixed bag. GNPX, So the trick number one, guys, the tip, not the trick. The tip is to find a repeatable process and repeat it. Do not deviate. This is what we teach all the time. You have to go slow and steady. Okay, guys? If you have a small account, you cannot treat it like gambling. To be honest, a small account is very relative. Some people, in day trading, guys, there's a certain amount of money, in my opinion, that you need to get over the PDT, right? It's possible to start under, and there's positive reasons why that you should start under, because this is a learning process, guys. Use PDT to your advantage, meaning this. PDT is your risk management friend. You have 3 round-trip trades a week so that you know that you cannot go crazy. So take that time to figure out 3 great trades. They add up, man. You can make $100 a trade, $200 a trade, and do it 3 times. And and think about that, guys. The hardest part is getting through, in my opinion, the very first few weeks where it's slow, meaning this. Meaning, let's say you make $100, $200. You're like, dang, dude, that's not going to be life-changing, right? But then do that for a couple weeks in a row. Do that for a month. And now all of a sudden you're up $2,000 on your small account. Now you're like, holy crap, you're getting somewhere, right? And so the key is this. When you are limited to a number of bullets you have, bullets meaning, I call them bullets like opportunities to trade. PDT only allows you to have 3 trades a week. And so use that to your advantage, meaning this, slow down. I hear a lot of people get over PDT, then they start to lose. Because they're like, holy shit, now I can start trading all the time. Because they think that a full-time trader like myself is trading full-time, meaning all the time. Look what I'm doing. No, I'm not trading all the time, guys. A full-time trader is just an opportunity for me to sit around and wait for my opportunity. If I have a job, and my job only lets me trade an hour in the morning, my window of opportunity is only an hour. But if I have a full-time trading job, I can sit there for 8 hours and pick my spots. And there's good pros and cons for that, okay? If you have excellent discipline, you can sit around all day long and wait for your spots. But I do not, guys. I'm a human being with a lot of bad habits, with FOMO. And so I need to remove myself from the situation, from the times and the bad situations that is going to cause me to potentially lose. Example is this. So that's trick number 2, guys. Okay, the tip number 2 is know when to fucking leave. Know when to get out. And so this is why we talk about the zombie rule. Because I'll tell you what the zombie rule is. Zombie rule is at 10:30, guys. We talked about this for years now. A couple of years now since we launched. It's something that Alex and I saw the pattern. And the pattern is, man, in the morning, there's a lot of volume. So it's harder to manipulate the stock. So it trades what I call organically. It trades for real. But starting at 10:30, the volume dies. And when the volume dies, these algos have a huge advantage. Because imagine if not many people were trading, placing orders, they are moving the box themselves. So instead of having, let's say, 100,000 shares moving at 20 cents, now 100,000 shares can move it 2 or 3 times that. Because there's less people trading. So I know that I am a good trader when it's organic and when it's not manipulated like that. And so I use the zombie rule as a short seller to save my ass. Okay, so the zombie rule helps the longs and the shorts. I'll tell you how. As a short, I don't want to be sticking around and getting trapped. And you hear all these guys crying about manipulation, about being trapped. But they cry, but they still participate in that trap. Leave the fucking room. Do these walks like I do. So my process is by 10:30, I start to basically close out all my shorts. If I'm up on the short, I can put a stop in, a trailing stop. And if it goes down, I will take advantage of that. But I do not ever want it to fucking what we call zombie me, because I overstayed a short. Okay, a lot of times what happens is this. They use the zombie hour, because it's low volume, to squeeze the shorts that are stubborn. What happens is if you're able to move the stock through a certain resistance, it triggers a lot of stop losses. And then it's a domino effect. That's how you get what we call a teleportation or a crazy spike that we call zombie. Okay? And how do you benefit if you're a short seller with that knowledge of the zombie rule? You save yourself. You get the fuck out. You hug your gains from this morning. Even though the stock will keep going down, it's fine. I want to make the money the safest. It's like going to battle, guys. If you know that there's a landmine over there, and the landmine gets detonated, possibly gets detonated at 10:30 and beyond, stop fucking going over there. Why am I fucking going over there? I'm going to play it safe, because going back to number 1. The tip number 1 was to have a repeatable process. Okay? Taking unnecessary risk is not a repeatable process for success long term. So I make my money using the repeatable process with sound risk management, and I leave. Tip number 2 was to know when to fuck to leave. You leave when the volume dies. But if you are a long bias trader, now you have to flip everything and do the inverse of the advice. If you're long, and we have people in the room doing this. So today was great. So NVAX. Look at the stock. Look at the intraday. It spiked immediately around 10:30. This is not a coincidence, guys. It may not need to, but just the knowledge that it may saved the room. All the shorts in the room stopped trading it. I don't want to get zombied. I hug my gains. Greed is number 1 biggest killer, guys. Greed and FOMO is all related. You always think you have cushion, and you want to make more. But let me tell you something about cushion. Cushion disappears very fast. When you always think in your head, oh, I have cushion, I'm going to gamble. You already fucked. Why are you gambling? If you want to gamble, go to the casino. And so this is the hardest part. The hardest part is for a trader is just to walk away, because you see other people making money. You're going to see like, oh my God, dude, I should have kept on trading. I would have made money. But I tell people this all the time. When you break a rule and make money, usually is the minimum money you make. But when you break a rule and you lose, usually is the maximum amount of money you're going to fucking lose. Because you're going to keep fucking adding to that fucking loss, because you're like, your brain's always screwed up. So don't even get to that point. Do not play the rabbit hole chasing, the rabbit cam chasing, like poker analogy. Do not do the coulda, woulda, shoulda. Get the fuck out. I made money. I'm up around $4,000 today, guys. And I'm going to tell you something. I'm like, fuck. That stock kept on going down. All these stocks kept going down that I shorted. And I'm like fucking FOMO. I'm like, man, I left another $2-3 grand on the table. I could have made $7,000 within the first hour. But you know what, man? could have also lost it. I played the safe way, and people go, oh, you left so much money on the table. But remember this, guys, leaving money on the table every day. If you left money at the table every day, it means you made money every day. Sure, I can make more, but I can also lose more. So I'm fixing that, of course. Everything is a work in progress, guys. I am never happy and complacent with my results. But I know that I have to work within the paradigm of risk management. Okay, so tip number 2 is know when to walk away. And so the longs are benefiting from the zombie move because of this. Longs are now looking actively during around that time, like 10:15, 10:30, for stocks that have a history of zombieing. Or just in general, strong stocks, because it doesn't hurt to take a chance, right, guys? So how do you make a trade, guys? You make a trade by first figuring out what the lines are. Number 2, you have to predefine your risk, meaning how much you're willing to lose, knowing when you get out. Do not ever place a trade unless you know you have a parachute. And a parachute is a hard stop or wherever it is. So place your trade, get in and put your hard stop. You never want to fucking fly solo on the combat plane without a fucking parachute or something, right, guys? Or seatbelt, whatever you want to use, okay? That's the analogy. So take a chance. So Ty today, one of my moderators, bought NVAX at 760 or something right before the zombie move, and it spiked up immediately to $8. There we go. You made 30 cents. Boom. No, because of that knowledge. And an advanced strategy I would give you right now. This is what we teach. It's called VWAP Reclaim. I don't want to talk about too much in detail these exact tips, because you know what, man, it's going to take a long time, more than the time that we have the IG to talk about this. So the zombie rule. Okay, that's the tip number 2. Knowing when to stop trading or knowing when to start trading. Remember, shorts and longs are the same thing, except, it's buy is a buy, sell is a sell. I just I'm a short seller, and so I stopped trading around the zombie hour because I don't want to get zombied. What you can do is if the stock keeps going down, I'll keep trading it, guys. Then I use a stop. But if you're a long, this is when you go, oh my God, my turn, motherfuckers, my turn to make money, right? Around 10:30, I would be looking for zombies. I would be looking for VWAP reclaims. Stocks that have gone under VWAP, it looks like it's broken down, trapped a bunch of shorts, and then broke through the VWAP, triggering a bunch of short sellers to stop out. That's a big, long mouthful of words, but replay this Instagram live, guys, later, and it'll make sense to you, okay? VWAP Reclaim. Okay, that's the tip number 2. So the tip number 1 was a repeatable process with proper risk management, slow and steady, guys. Number 3, you know what, man? There's a bunch of this. Number 3 is, you know what, man? I don't know what number 3 is because there's a ton of these. And I'll tell you very simply, small gains add up. Okay, small gains add up. So you want to lump everything to 3, you can do a couple of things. You can talk about risk management. That's the key to growing a small account. The key to growing a small account, people always think, oh, how do I make money? How do I make money? But people disregard not losing money. Okay, how to grow a small account, not to lose fucking a bunch of money. Because, of course, you're going to make money. Even a fucking, they say like, right, even a broken clock, is right 2 times a day, right? And so you will make money. But how do you avoid that one loss that'll wipe your account out? Okay, so that's where number 3 would be. Focus not only on how to make money, but how risk management works for your niche, for your setup, for your process. So risk management is the fucking vital key. But I lumped it to every single line item. Every single bullet should always be with risk management. When I talk about process, I talk about risk management. When I talk about number 2, knowing when to not trade, like a zombie hour, is risk management, right, guys? Avoiding the losses, avoiding the grenades, avoid the bombs being exploded underneath you. So that is risk management. Risk management is every single fucking bullet out there. Every bullet should have a risk management in it. And that's the key, guys, to the longevity. Okay, slow and steady. And I'll tell you exactly what I traded today. So I started the day making small feeler trades at NVAX around $10. Actually, it was at $9.50 first. $9.50. But I knew it was so early. It was still pre-market. You can follow along my trades. I posted that chart on Twitter, guys. I post all my trades in the chat room. So, and I post them on Twitter. So if you take a look, 950, I made money from 950 down to like $9 or whatever it was. And then it went back up to 950, but I knew, it was like, man, the second time it ripped up, so there's a strategy we call the first resistance. Okay, I don't want to get into detail. When you join, it's a very powerful strategy, which I use as a short seller to make money today on NVAX, as well as ICCC. The first time it hits a major resistance line, I short. But always with risk management, right, guys? So I'm never in on the first trade full size. I have to scale in. And so, like, damn, you know, all these I made money on, I'm not max size. I could be if I add to a winner. But some of these are so fast, it doesn't give me the opportunity to add to a winner. Adding to a winner means I enter, and it confirms, and I'm adding along the way. And with proper risk management, I should unravel that and stop out if it broke my first entry. All right. So once again, it's risk management. This is very complex stuff, but I'm gonna dumb it down for you guys. I'm gonna dumb it down for you. Today I wanted to get more technical, because usually a lot of times I'm talking about mindset, but today I wanted to talk about the process. And it's simple as this, guys. A lot of people tell me, man, they used to be wanting to trade for the home run. They want to make 50 cents, they want to make $1 on these stocks. And so they hold, and they fuck, you know, and sometimes they make it, sometimes they don't. But why are you holding all day when you could be making 10, 20 cent, 30 cent scalps all day long? Depending on the stock, of course, right, guys? If it's a $10 stock, I'm not scalping for 10 cents. But if it's $1.25 stock, I'm scalping for 10 cents, which is a huge percentage, right? And so I've been scalping all day long, and all of a sudden it added up. Using very good risk management, I was barely down anything. It was just like accumulation. After a few good wins of scalping, my cushion is made. So once you get that feel, you know, the first trades you should do, if you have this tendency like I do to have FOMO, go small size. There's nothing wrong with having small size. And the thing is this, guys, I talk about small size is a comfortable size. So as a trader, I used to trade huge, man. I mean, really big. And so over time, I realized, like, dude, that was so stressful. I locked up most of my money. I can still make a good living making $4,000 a day. You know what I mean? I don't need to be making $10,000, $20,000 a day anymore, right? And it adds up. And so when I talk about small size, I'm talking about comfortable size. You know what comfortable size, what it does for you? So this, you can consider this the tip number 3, the last tip, is to have the proper sizing. Because you're not scared to get shaken out by little moves. If a little ass move shakes you out, it means you're sizing too big, guys. You're sizing too big. Let the stock work. You have a thesis. You're saying this line, 150 line, is going to get rejected. So what I'm going to do is I'm going to short half at 150, half at 160. Okay? And then if 165 gets broken, whatever, 167 gets broken, I'm going to stop out. So let's say that was my plan. And if it's a front side, Alex has a great rule. Use only 30% of your size. So stopping out is not going to hurt that much. And so when I made a bunch of those trades and they add up, boom, already had cushion. So an example would be, I'm using comfortable size. If I had 10,000 size, you know, every fucking 10 cents is a fucking $1,000. I might get jumpy just for a 2-cent move. It's a $200 move. I'm just making it up, right? For an instance, right? So imagine at 10,000 size, and 2 cents is $200 already. 5 cents is $500. And if your count is, let's say, $10,000, that's a lot of money. You're like, holy fuck. So you stop out way too soon. So imagine you dial back to 2,500 shares, to 2,000 shares. Okay? So that each 10 cents is only $200. Each 2 cents is only $40. You're not going to get stopped out. So knowing the right proper size, you can make more money because you do not get stopped out as much as you do before. Because, you know, it's simple math. The larger the size, the tighter the stop. Because you don't want to get blown away with large size. The smaller the size, the wider the stop. So think about that. How many times were you shaken out and you're like, fuck, I was right. Why did I stop out? Because your size too large. You chickened out. You chickened out because you were too large. You fucked up. So imagine all those times that you stopped out and you got tricked. If you were a quarter of your size, 1/4, you would have held. You would have made money. And then you can always add. That's the key, guys. Adding to a winner. Adding to a confirmation. Okay? So that's the trick number 3, guys. Size down. Sizing down has yielded more consistent profits for me as well. Because I'm not getting freaked out. If you are worried all the time about little movements, it means you're sizing too big. And once again, guys, this is a marathon, not a sprint. A repeatable process. You know, the first day, you make $200, may not seem much, but it adds up. So imagine if I made, today I made $4,000. Last week I made, pretty much about the same every day. And so it adds up over the course of a week. That's a fucking Honda Accord, guys. If I don't fucking get greedy, right? If I don't get greedy and I fucking leave, I know myself. Track your fucking trades. What I do is these are, if I get fucking greedy and I want to make more money, that's when I fucking start trading during zombie hours. I don't leave and I get fucking dinged. Whew, that was a fucking handful to fucking say. I'm going to stop there and take some questions if you guys have questions on this. How do you trade against quants? See, people asking these questions like, what the fuck? What does that even mean? How do you trade against quants? How do the quants trade against me? How do quants trade against us? You know what a quant is? People throwing these fancy fucking shit. Quant is a fucking algorithm based upon historical data using mathematical models. That mathematical model is my fucking head. Quants are not fucking trading these small caps that are trading at $2 a cent. They're using that to trade fucking Tesla, IBM, Microsoft, Apple. Quants are not fucking trading fucking $2 stocks, guys. But even if they were, how do you trade against them? How do they trade against us? They still have to use the same principles, right? Resistance, support, historical charts, float size, knowing all this information, knowing when the volume slows down at zombie hours. So don't worry about algos. Don't worry about all this bullshit, guys. It's the boogeyman that you're afraid of. Might as well not even get out of bed. Everybody trades the same way. They just have a more sophisticated algorithm, okay? But it's all support, resistance. Okay, Bao, what is your starting position size on a green day? So you see, people are asking me this question. It's like, you have to remember, it's all relative. What is my position size? Am I trading Apple? Or am I trading a fucking 10-cent stock? So you can't really fucking say shit like that. So I want to teach you how to be more critical thinking, okay? Because a lot of these questions that I get asked, it's a lazy question. I'm not calling you guys lazy, but you know what? You deep down inside, you think about it, this lazy question. Asking someone, what is your starter size? It's a lazy question. You haven't thought about that question yourself. So before you ask a question, guys, a tip is this. Ask yourself that question. If someone came to you and asked you, what is your starting position size? What's the first thing you're going to ask them? What's the stock? Apple, 1 share versus like a 10-cent stock, 1,000 shares, right? So the trick, guys, is always to ask yourself the question that you would ask someone else or that you would ask the market. And that's why we call planning. So there's a saying, plan your trades and trade your plan. And that's part of the process that we teach. The part of the process we teach has all these questions that you just asked me. Where am I starting my trades? How many size? How many shares am I trading? Those are part of the process. So you actually hit it on the head by asking these questions, which is a part of the process. So you ask yourself, you build your trading plan around our rules, and then you consistently do this. That's it. Whew. Can you tell us more? Obviously, the stocks you traded. Dude, I traded NVAX today. It's a $10 stock. I also traded GMPX, which was a $1 stock. So when you ask these questions, sir, I don't want to be a dick, but come on, man. I don't even know how to answer that question. What's your starting size? Right, guys? So what I do is this. I don't do a starting size, guys. I do a plan. I do a risk analysis. I call it predefining your risk. Knowing, okay, I have X number of shares to work with. I'm going to do the math. The rule that Alex has is 30% front side. So let's say 10,000 shares is my max. I take 3,000 shares. That's 30%. I can scale in 1,500 shares each line. So I have 2 lines I scale in. And that's it. So if you want to talk about position size, that's how you do it. But obviously, NVAX, I'm not going to want to have 10,000 shares or 3,000. It's all different, right, guys? Or if it's a penny stock, it's a totally different size. So when you talk about position size, you got to talk about you got to ask the correct question, like, okay, how do you scale versus how much do you scale each line? So you're saying the difference, like, so it's all about the scaling. We teach that as well. But it's the process. So you have X number of shares, and what's your process? My process, like Alex has, is 30% front side, so you don't get killed. So, for example, dude, I was really scared of GMPX today, and so I limited myself to just 5,000 shares. A stock that runs from 70 cents to $1.60, you don't need much shares to make money, because I'm just constantly scalping, and it's still front side of the move. So for that stock, is not my bread and butter, meaning it's very hard to trade that stock. There's very little edge because it's still the front side. I don't know where they're going to take that stock up. It's overly rotated. It's huge volume. So they manipulate it wherever they want. They own most of the float. I hope that covers and understands these type of questions, guys. Any more questions, guys? A lot of the guys out there, I'm telling you, man, will make it seem it's so fucking easy. I'll fucking answer you fucking these questions. But then by answering these questions doesn't really help you, man. Because most of the time is relative to which stock it is. But the process is the same, guys. You know, you determine where your support and resistance, the support and resistance is, which we call the lines. And then we check the filings, make sure there's no dilution, things like that. And then we look at the time, and then we make our risk analysis so that we know when to enter and when to exit the stock. Remember, man, a plan has a couple of components, all right? It has your thesis, like why are you even getting here? What's your edge here? Okay, the edge could be as simple as a resistance, okay? But you have to have a reason why you're entering the stock, and you also have to have an exit plan. An exit plan includes not only where the fuck to take your profits, but where the fuck to get out. A lot of people have a problem with this. They do one or the other, and they don't do both. Okay? So an example is this. One person may be too focused on not losing. So what they do is they always put a stop out. That's great. But they don't have any covers. So what happens is this. They get greedy. They think they're up on the money. And then what happens is, so many people tell me, Bao, why didn't I just take some off? Because you didn't plan it. If you don't plan it before you get into trade, it's very difficult to make a trading plan on the fly. Whenever I make a trading plan on the fly, it means I winged it. I gambled. You know, I'm chasing. Every stock, you should have a plan. The plan includes where to enter, where to add, where to exit for profit, where to exit for a loss. And so by knowing that, you're ready to take some off of the table when it gets there. And your small size, guys, your small size means that you can put out these orders ahead of time. Market makers are not fucking worried about your 2,000 shares. Trust me on that. They're not going to fucking take you over 2,000 shares. Put the orders out. Because what happens is this, man. I have a lot of times people tell me I get greedy. I cancel my fucking profit taking. I mean, what the fuck? It's like, okay, that's called gambling, right? So the thing is, I always take half off, guys. Half off. So that it cushions me. I'll tell you another secret, okay? The reason why I take half off, because let's say you're up 10, 20 cents. Okay, I'm taking a quarter. So I took a quarter, whatever it is, right? So now I'm up, let's say 10 or 20 cents. That becomes my cushion. That's already money in the bank. So that can afford me to hold the last position a little longer. And so if I want to, I could set a trailing stop so I don't even fucking lose the last bit, right, guys? So cushion is important in terms of the position trade. You have to take some off so that it gives you cushion for the rest of your position to keep running. Because if you basically never took any off, and one spike, you can give back all your gains. So why are you doing that? That's not a systematic way of doing it. You know, you make the plan beforehand where to take your gains. Usually I take them at the lines, the resistance or the support, depending on if I'm long or I'm short. if you are just starting with 2,500 account, would you trade penny stocks? I have a small account. I have a large account. I always trade what they call penny stocks. Penny stocks to me are stocks under $5, okay? I'm not talking about fucking like 10-cent stocks here. I do not, for me personally, I don't like to trade anything under $1. That's more of a gamble. That's pump and dump area. I trade stocks that start from like 40 cents and then enter the dollar range. So what happens when that happens is, it's exhausted its move. So I'm waiting over there to short, because when it enters dollar land, guys like me start to short that shit. So yes, definitely 2,500. But I'll tell you how you get started trading, guys. I always hear people talk about this. Okay, the first step is to learn, educate. People think they're gonna have $2,500 and start trading right away. Nah, dude. A scammer, a furu, a fake guru will tell you that. Oh, you only need $2,500. Join my shit. Join my fucking group. Enable hotkeys and just follow my alerts. You're gonna be rich. Oh, I bought here. Oh, you should buy there. Oh, you didn't feel? Make sure you use hotkeys next time. Hotkeys and market orders only, okay? The reason why they do that, because they want to fucking scam you to make the money, right? But when you enter, and when you're a beginning trader, guys, and when you enter a service, the first thing you got to do is to learn. You cannot build a fucking bridge unless you fucking sit down and learn calculus. So I always tell people this, man. It doesn't matter. You can start with zero. For the first couple of months, you should not even fucking trade. If you trade, it should be very small size to learn the mechanics of trading. Example is this. You should watch our videos. When you join, watch our videos. Stay into the room. Watch my charts. Watch Alex's charts. Watch other mentors and moderators' charts. And see the calls. See the action. Take a look. So the first thing you do is for the first week, just immerse yourself. Don't be worried about learning everything. You're not going to learn everything the first week, guys. It's going to take you many months, okay? Like anything good in the world, it's going to take you many months. Immerse yourself. See what's around yourself. Don't just start hammering buttons. So you watch and you learn, and you watch our videos, and then over time, it starts to make sense. You pick one area to focus on each time. And then you pick one strategy to focus on and work on that strategy. Then you move up to the next strategy, okay? But the key is, doesn't matter how much money you have, guys. The first step is to learn, educate yourself. The moment you start educating yourself, you can start making money later on. So I always tell people to watch the videos, to immerse yourself, see what other people are doing, and then start a demo account for 2 weeks. 2 weeks to 1 month. Do not go over 1 month. I'll tell you why. Because a demo account is a simulation. It may have live level 2s, but the execution is not live. A lot of times, guys, I don't get fucking filled. Even though the price goes there, I don't get filled. It's not an instant fill, and every time you fill, it causes, a deviation in the level 2. And so if you're trading a demo account, you get instant fills whenever you want. And you think it's easy because it's instant fills. And then I don't want you to go over a month, because you get too used to that habit of instant fill where you can just click at the last moment, so you don't prepare and plan. In real life, dude, it's not instant. You have to prepare and plan. You have to fucking put the order out there, and it hits you sometimes, right? If you don't put the order out there, by the time you fucking hit it, it's too late. So how do you go from simulation to real trading? So the first step, classroom work, which is watching the videos and just watching what people are doing. Number 2, simulations. Okay, simulation. The goal of the simulation is this, guys. The goal of the simulation is to learn the mechanics. What is a buy? What is a sell? Looking at the chart. You know what I'm saying? So now you're a simulator. It's like a pilot. A pilot does not jump onto the 747 and start flying. They have a bunch of simulations. First, they start with a classroom book. They're reading the fucking plane. They know what the operations are. Then they jump into the simulation, and then they go to the real thing. But when they go to the real thing, they're sitting with a mentor. They're not flying themselves. They need like 10,000 hours or whatever it is before they can go solo, right? I'm just making it up, but there's some sort of law, right? Same thing with trading, guys. So when you move from simulation to the real thing, which you should do within a month, otherwise you get very bad habits, use 100 share size, very small. The reason is you're not there to make money yet. You're not ready to make money. You're trading against guys like me. How the fuck are you gonna compete with me, dude? I've been doing this shit for 20 years, right? And I want you to start trading right away. That's how I fucking killed it today. Okay, a lot of fucking sheep. I fucking murdered the sheep today. I'm eating fucking lamb chops today. So you use 100 shares to mimic what it feels like to enter a trade and not feeling the trade, to having the emotional of being down even $100. You're like, oh, you know what? It's totally different when you're fucking down real cash than it is a fake money, guys. And so that's what you mimic. And so you start just using small size. I call that tuition. You know, sure you're gonna lose money, but fuck, dude, it's going to school. Okay, if you can't fucking make money, like meaning like with first you gotta make money with a simulator. Try to be consistent with a simulator before you move on to the real thing. Once you're consistent, a little bit consistent, you move to the real thing with 100 shares and see if you can be consistent. Don't worry about the fees, okay? At this point, don't worry about the fucking fees. We have Cobra and stuff that'll help you with very cheap fees, and there's a lot of platforms out there now that have free fees. So, you know, so guys that don't have much money, you know, you can go to Schwab, Ameritrade, E-Trade, they're all fucking free now. Or you go to Cobra, tell them you're MIC, and they'll give you a great discount as well. Okay, so first, classroom work. Classroom work is always going to be there, guys. I'm still doing classroom work. I'm always going back and forth between my live trading and my classroom work. Okay, I'll tell you why. I'm always paper trading in my head. Even though I'm not in the stock, I'm watching for patterns. I'm watching to confirm what my process is doing. I'm always refining my process. Okay? I'm gonna stop at the last thing. We'll talk about process. People always talk about you take what the market gives you. You know what the reality of it is for me? I take what my process gives me. Okay, my process is gonna dictate how much I make today. I feed that process like an engine. I feed it fuel, which is the number of shares. Okay, and it will spit out my result, and I should be happy with that result. I should not force it, because if you want to tweak something, tweak the process a little bit. So instead of doing 2 scales, you do 3 scales. Instead of scaling at the first line, I scale the second line. Instead of scaling the middle lines, I scale the outer lines. You know, you tweak stuff like that. So you have a process. Okay, that process you're going to learn when you join MIC, and you're going to learn during the simulation, and then you're going to learn and refine once again with real trading. So now you have a consistent process that if you execute it to plan, you will make money. The problem is I can give you the best process, the best methods, the best strategies, but human emotions always fuck me. Always fuck you. You get in too early because you're like, you don't want to miss a trade. And you're like, fuck, if I just waited, I would have a superior feel. Whew. Why is 9 to 5 important while trading? Well, that could be the next topic, but I'll give you a sneak peek. I have a lot of guys that have to go to work. And by going to work, they hug in their gains that they made in the morning. They don't get zombied. Okay? And that's where the zombie rule came in. I was talking to one guy, my buddy, who's a moderator. His name's Alan Wiggins. For the longest time, he has a job, so he has to go to work. And so he never gets zombie. So every time I text him, I'm like, dude, did you fucking see that big-ass zombie? He's like, what zombie? I'm at work. So he hugged in his gains. No FOMO. Get the fuck out. Whereas I'm sitting there. Dude, I've had days where I'm up like $8,000, guys. I remember this still. I'm up like $8,000, and I end up fucking down like $12,000 because I'm like, I have cushion. I'm fucking up so much. How could the stock fucking go back? So I keep adding and adding. I call it adding to a winner. But dude, when the stock is no longer part of your thesis, you don't want to fucking be in it. The moment you realize that the stock is not doing what you think it is doing, you fucking exit and you save money and walk away. And so guys with a job is actually good. I'll tell you why. I'm going to end it with this, guys. Having a job is fucking the best thing that you can do. Best thing you can do. You know why? Because a job makes you money. That money basically pays your rent and your food. So trading now is not as stressful. It's stressful, but it's not as stressful. So what, you lose $40 on this trade over 100 share size while you're learning. It's not as stressful as if you don't have a fucking job. That $40 could be freaking is your whole day of food. So having a job is great. It forces you to trade and learn the proper way without focus on the money. If you're too focused on the money, you will lose. I'll tell you right now. Every day that I think that I'm going to bank because I need to pay the bills, like I want to buy the next new car that comes out, and I'm going to, oh fuck, today I'm going to fucking bank, and I fucking lose because I deviate from my process Because I'm pushing, I'm forcing, I'm fake. I'm wanting that fucking trade to work so bad. It's like everything in life, guys. It should be smooth. It should be like free forming. It should feel natural. Trading over time will make you feel very natural. Like when I'm sitting there, I'm not thinking, oh my god, it has to go here, it has to go here. No, dude, put my plans out and just fucking, you feel like you're in the Matrix, dude. Wow, I have 50,000 to trade with. I have been profitable the past 2 years. Why would you recommend joining MIC? See, that's the thing people don't understand. People, there's certain tricks that you will never learn by yourself, guys. That took me a long time and a lot of losses. An example is the zombie rule. Before I talked about the zombie rule, no one was talking about the zombie rule shit. Okay? Before I talked about line charts, no one's using the line chart. So I had to figure out, why am I fucking giving back on zombie rule? Zombie rule now seems so obvious, guys, because we talked about it and people see it. But without, let's say, like a mentor that's been there, you wouldn't know. That one tip alone is going to save you fucking half of your profits, guys. And number 2, trading is a very, very fucking lonely lifestyle. In order for you to become successful long-term, in my opinion, you gotta be some fucking hermit that's some weird degenerate where you don't need to have human interaction. You know, like fuck, that was me for a long time. And I went crazy, guys. I made many, many millions trading by myself. And I couldn't take it anymore. So I had to train. So I trained other guys to work with me. So I always had a trading accountability buddy, a tab. And that tab enabled me to do 2 things. Share the workload. 2 sets of eyes, 2 brains are better than 1. We can scan the market together, looking for news, looking for filings, dilution. So we share the work. We're trading the same things, but we have now a group of guys trading the same thing, right? And so we share the workload. So I would wake up in the morning, he would share the list, and we would go through the list together. And if both of us agree on that list of tickers, boom, that usually is a very good trade. So when you talk about why you need other people, man, the arrogance is what kills most traders. I'm telling you guys. You know, I never thought I would make this kind of money. You know, my goal was just to make $500. You know what my goal was? To make $100,000 a year. I thought I'd be rich just making $100,000 a year. And so trading together with my tab back then, dude, we were making fucking over $100,000 a day sometimes. You know what I'm saying? That's because we help each other. We push each other. Because, like, I'm sitting around in my bubble. If I don't talk to anybody, I think $100,000 a year is fucking great. How the fuck am I supposed to know that I can make more? It's not the greedy thing, guys. It's the leveling up. Okay? Surrounded by people that have all the same work ethic. Helping you. You see more opportunities. You learn more things. I'm still learning every fucking day. Even without MIC, I will still be in some sort of chat room. Because the chat room is my scanner, guys. Okay? We have 800 guys scanning the markets, telling you what's moving, giving you news. You know? So you learn every day. What are strong confirmations to enter bigger size? Death line. That's too whew. I work around TD Ameritrade as a trader specialist. Knows what it is. Those guys, if they were really trade expert specialists, they would not be working for TD Ameritrade, and they would be trading their own money, making millions a year. That's the facts. Ask how much are they making. Sure, they're making good money, but I don't even call myself a trading specialist. Notice that. I hate if you take a look at all my social media. There's no words about trading in there. My name's Modern Rock. You know, I'm not a fucking. If you take a look, I didn't say I have 20 years of trading experience, all that stuff. So, guys, you know, let your work speak for yourself. When I hear people talk about being a trader specialist, I'm like, really? Are you fucking making millions of the year? You're not really a trading specialist, right? Whew. The point is simple, guys. The ego is what kills you. To this day, guys, I still, you know, whenever I get arrogant, I get killed. I need to open my eyes and learn from everybody. Even the beginner has taught me a lot. The beginner has taught me a lot in terms of patience. You know, so I've been more patient on the trade. Before I would like take my money and fucking walk away. Now I'm like, what if I just become more patient? So you learn a lot of yourself from other people as well. You know, not just the technical, but you learn the psychological. And you imagine you surround yourself. It's like everybody has something to teach someone else, guys. And the bottom line is this, man. It's like, take a look at the people you surround yourself with. You know, if they are all arrogant and never wanting to learn new things, then you're in a fucking problem. I always want to do this, guys. I want to own the poorest house, the cheapest house in the neighborhood. I want to walk into a room where I am one of the guys making the least amount of money. That means I'm in a fucking good room, right? If I'm the guy making the least amount of money, I'm like, holy fuck, this room is phenomenal. I can learn from these guys. So always pick your environment where you can grow and learn. See, they profit for the company because it's like, dude, they're not really specialists because they're trading other people's money. And so if they're really specialists, they're confident and all that. And so, you know, they make good money, but they don't make it for themselves. I'm not dinging them or anybody else, guys. But if you're fucking really good, you gotta be like, fuck. You know, that's the arrogance that they come upon. You already know the answer, guys. I'm not here to bash anybody. You know, that's a great living. Making 100 grand, 200 grand is a great fucking living, man. My whole point is this. You asked me a question about what does MIC help? MIC helps improve my trading, Alex's trading. Alex used to work for a big prop firm. He was in charge of fucking 8 figures of buying power. You know, he would be swinging 40 grand up and down, wherever the hell it is. Now, through MIC, he realizes a lot of things. That you don't need to be swinging 40 grand. You want to make the most money you can with the least amount of stress. You know, you're not surrounded by these. You have to surround yourself with the right environment for yourself. Everyone's different, man. I don't need to be making 100 million a year. I'm killing myself. I'm dying of stress. You know, stuff like that. It doesn't fucking hurt. That's my point. People are so arrogant to think like, oh, I'm making all this money. Why do I need you? You don't need me. But shit, if you're making all this, like I am subs to many different rooms. Do I need those rooms? No. But if I can pick up, so like, I'll give you an example, $180 a month, right? If I can fucking pick up one trade, that pays for my fucking membership. You see what I'm saying? If I can pick up one trade from that stock, from that room within a month, you have a fucking month, guys. And I'm pretty sure you're sitting in MIC, you're gonna be making a lot more money than $180 a month if you fucking follow the process. So that's what I'm trying to say. People are like, why do I need the room? I mean, if you're fucking being a successful trader, it's kind of like it's kind of like, you know, you're contradicting yourself. You're making all this fucking money trading, and then you're already here listening, and you're like wondering why should I join? It's because I'm sub to pretty much every room, dude. Because if I can see what the rooms are doing and learn from whatever, and it makes me more than $180, dude, I got my money back. And one more thing, guys, it's tax deductible. If you have trader tax status or an LLC, we actually have a CPA that will help you set up all that stuff. So it's on our website, guys, under tax advising or something. He's a registered CPA and is also a day trader at MIC. Whew. Any questions, guys? Today was a different kind of theme for my walk. Usually I'm doing more of the mental. Today I was very so let's summarize, okay? And then we'll end it here. I don't want to keep you guys too long. Top 3 tips, right? Process, repeatable process with risk management. Number 2 is knowing when to get the fuck out. Zombie hours, things like that. Or when to get in. If you want to get in zombie hours. Number 3, I forgot what number 3 was, but you know, consistency adds up. That's all it is. It's going back to number 1. Risk management, same thing. Okay, so number 3 was don't just focus on making money. Focus also on how to prevent unnecessary losses. So an example is this, man. This is what Alex taught me as well. You know, like I used to make, let's say I make $1,000 a day. Okay? And then I bleed out $200 every day because I'm bored and trading during zombie hours and I have nobody else to talk to. Imagine $200 times 5 days. I'm down $1,000 every week. That's $54,000 a year. I'm bleeding out. $200 a day. If I lose back $200, that's no big deal. But if that becomes my habit where I'm throwing $200 just to fuck around because I'm bored, it adds up. So that's the tip number 3. To go back to your trades, figure out all the leakage, all right? The slippage, the leakage. like where you can like cut down. Like if you're over relocating a stock, for example, if you're short. A lot of guys like to locate too much but never use it. That is money, man. That's $100 a day and more that you can fucking reduce. You know what I'm saying? Or if you have a bad habit of, let's say, slamming the bid or the offer, put up the order. I save so much money in commission, guys, by not slamming the bid, by what's called adding to liquidity. I get paid for that. So my commissions come out to be free. Some days I even profit because my commissions are cheaper than the rebates. Okay, so those are the tips, guys. So, you know, keep an open mind, and unless anybody had questions, I'm gonna end it here, guys. Oh, real estate? Hit me up on DM, guys. If you guys want to know real estate, I got something going. So if you have like at least $50,000, I don't want to talk about it too much, but just DM me. We have some way for you guys to get started. So, but anyways, all right, guys. I'll catch you guys later.